lot to cover today because several major stories are unfolding around the world right now, from escalating conflict in Middle East to shifts in global markets, AI competition, and new developments in crypto regulation. We will start with a major geopolitical story. Iran has just named a new supreme leader after the death of Khamenei, and the war in the Middle East is now spreading across the region. Missile strikes are being reported in several Gulf countries. Oil prices have surged above $110 a barrel, and the global economy is beginning to feel the impact. Then we'll zoom in on Dubai, long seen as the financial safe haven of the Middle East, where missile attacks are now shaking investor confidence and raising questions about the future of one of the world's biggest capital hubs. After that, we'll shift gears to the financial system, where US regulators are sending a major signal about tokenized securities and how blockchain based assets will be treated under traditional banking rules. We'll also look at what's happening in China's tech sector, where major companies are racing to deploy AI agents like OpenClaw, which is a new generation of AI that doesn't just talk, but actually perform tasks. And later in the show, we'll discuss why Vancouver's plan to build a Bitcoin strategic reserve may now be scrapped due to legal restrictions. And just to wrap up today's program, we'll be joined by a very special guest, someone I personally admire in the Bitcoin community. He played a key role in one of the most important legal battles for crypto in India, helping fight the Supreme Court case that overturned the country's crypto banking ban. So stay with us for the conversation with Suril Desai later in the show. So first, let's start with the biggest story right now, which is the rapid escalation conflict in the Middle East. So first story of the day, very major breaking development in the Iran war. So Iran has now named a new supreme leader, which is the son of the late Khamenei. This is a very significant moment because the supreme leader in Iran is the most powerful person in the country. The role controls the military, the Revolutionary Guard, and the country's overall political direction. So his son, Jabtaba, replaced his father, who had ruled Iran since 1989 before being killed at the start of the current war. And this decision sent a very clear message. So Iran's leadership is staying firmly in the hands of hardliners. The Iranian Revolutionary Guard has already announced its support for the new leader, and the Iran-backed group in Lebanon posted a message calling him the leader of the Islamic Revolution. So there is already strong support from the Iran's regional allies. But this decision is also creating immediate tension with the Washington. So President Trump had previously warned that the United States would expect to have influence over who leads Iran next. He even referred Mujtaba Kamana earlier as a lightweight. Donald Trump also said that if Iran appoints the new leader without US approval, that leader might not last long. So the appointment of this person could further raise tensions between the two sides. So Israel, of course, also reacted immediately, very quickly to the announcement. The Israeli military issued a warning saying it will pursue any successor to Iran's leadership if necessary, and that even warned people who involved in selecting Iran's next leader could also become a target. That shows just how intense this conflict has become. This is no longer just a battle between militaries. It is becoming a direct confrontation between governments and leadership structures. Meanwhile, the war is escalating across different regions. Several Gulf countries are reporting missile and drone attacks linked to Iran. The UAE says its air defense are currently responding to incoming threats. Authorities reported ballistic missiles and drones targeting parts of the country. Residents in Dubai and Abu Dhabi heard alarms telling them to seek shelter immediately. At least one explosion was reported in Dubai. So the conflict is no longer limited to Iran and Israel, maybe the US. It's now affecting multiple countries across the Gulf region. So now let's talk oil price because this is the happen to be the global economic impact because the war is now hitting one of the most critical points in the whole world's energy system. So the Strait of Hormuz is a very narrow shipping route which happen to carry about 20% of world's oil supply. Right now, the strait is effectively blocked due to the war, and that is pushing oil price rising sharply. So, of course, if we look at the Brent crude oil, it hit even above $110 at some point per barrel, and right now is retracing back to $108.7 or $108 per barrel. Just to give you some context, the last time oil crossed $100 per barrel was during the Russia and Ukraine war back in 2022. And this is already having an impact on consumers. In the US, the average gasoline price has jumped to around $3.46 per gallon, up sharply from about $2.94 just a week ago. That is a massive move in such a short period of time. Another major concern is that oil production across the region is now falling. Several major producers are cutting output due to safety concern. For example, Kuwait announced it is reducing production and refinery activity because of threats to shipping routes. Iraq, which is the second largest producer in OPEC, has seen production collapse at some of its largest oil fields. Output there has reportedly dropped about 70%. The UAE says it is also carefully managing production levels. All of this is happening because tankers cannot safely move through the Strait of Hormuz. And when that shipping route closes, global oil price, global markets feel it immediately. This is why energy markets are reacting so quickly because like oil is one of the most important inputs for the entire global economy. Higher oil prices that will eventually affect, of course, transportation, manufacturing, food prices, and shipping costs, and ultimately, which will lead to inflation. And when oil jumps above $100, that impact spreads far beyond the energy sector. It affects almost every sector. The US government is trying to reassure the public that the situation may not last long. Donald Trump said the rising oil prices are just a small price to pay for eliminating the threat posed by Iran's nuclear program. Energy security Chris Wright also said the disruption could last weeks but not months. The argument from Washington is that once Iran's ability to threaten oil shipping is removed, energy markets could stabilize once again. But for now, the situation remains very uncertain. At the same time, the fighting itself is continuing. Israeli and US forces say they have targeted a few storage sites belonging to Iran's Revolutionary Guard. Several large fuel depots in Tehran was hit in recent strikes. Satellite images show fires and damaged tankers at the sites. Israel say the goal is to weaken the military infrastructure supporting Iran's operations. Iran, however, accused the US of targeting civilian infrastructure. Of course, the US denies for doing such thing. America say they will never target surveillance facilities. Meanwhile, several Arab countries have condemned Iran's attack on neighboring states. Foreign minister across the region held an emergency meeting. They described Iran's strike as a serious threat to international security and called for the attacks to stop immediately. They also urged the United Nations Security Council to step in and pressure Iran to halt its military actions. So the political pressure on Iran is now increasing from multiple sides. So when you step back, the situation is getting very serious. The conflict has already caused the rising oil prices, infrastructure damage across multiple countries, and disruption to global energy supply, and the death toll continues to climb. More than 1,850 people have reportedly died since the war began. Over 100,000 people in Iran have been displaced from their homes, and the conflict is now stretching across several countries in the Middle East, which means this is no longer just a regional issue, it is becoming a global economic and geopolitical crisis. Speaking of the region economic crisis, I now want to dive deeper and zoom onto Dubai because Dubai is one of the most important financial hubs among the whole world. For years, Dubai was known as the safe haven of the region, a place where global investors, billionaires, and hedge funds parked their money to. But right now, that image has been shaken by war. Missile attacks linked to the Iran conflict have reached the UAE, including cities like Dubai, like Abu Dhabi. And for the first time in years, investors are now asking a very serious question. Is Dubai still safe for global capital? So let's take a look at the situation in Dubai. Air raid alarms sounded in Dubai and Abu Dhabi, warning residents to seek shelter immediately. People in the city even reported seeing missiles intercepted in the sky from their apartment windows. Imagine sitting at home and watching missiles being shot down above your city. That's something most people in Dubai never expected to experience. Some falling debris from an intercepted missile even hit a vehicle, killing a driver. While the physical damage has been limited so far in Dubai, analysts say the biggest impact might be psychological because Dubai's economy relies heavily on foreign investors and very wealthy residents. Over the past few years, the city has attracted thousands of very wealthy individuals from around the world. This includes Russian billionaires, Chinese investors, crypto entrepreneurs, family offices, and European hedge fund managers. Dubai became popular because it offered low taxes, easy residency programs, very strong property markets, and most importantly, political stability and safety. But the missile strikes are now testing that reputation. Local investors say the biggest risk may not be the physical damage as a loss of confidence. So financial markets, of course, reacted immediately. After the missile incident in Dubai, if we take a look at Dubai's stock market, fell about 4.7%, and Abu Dhabi's market also dropped roughly 3%. One of Dubai's largest real estate developers, so Emaar, saw its shares drop more than 4%. So that tells us something very important. Markets are reacting not just to the attacks themselves, but to what they mean for investor sentiment. Another signal came from wealthy residents. Some investors began leaving the country immediately. Reports say several high net worth individuals chartered private jets just to leave the UAE. One European hedge fund team reportedly paid 250,000 US dollars for a private flight out of Abu Dhabi, not because the city was destroyed, but because they didn't want to take even a tiny risk. For wealthy investors, safety is everything. And if they feel uncertain, they often move the capital very, very quickly. This matters because Dubai's real estate market depends heavily on foreign money. Over the past few years, property prices in Dubai surged. According to the industry data, home prices rose more than 12% in 2025 alone. Transaction volumes reached record highs. Nearly 80% of new sales were off plan properties. That means many buyers were purchasing homes based on future expectations, not immediate use. And expectations are driven by confidence. So if confidence drops, the property market could feel the pressure. Some early signs already appearing. During the first few days of the conflict, property transaction in Dubai collapsed dramatically. Daily home sales dropped from more than 800 transactions per day to just 23 deals during the peak of the missile attacks. So, of course, that is a huge slowdown. Some luxury homes have already started seeing price cuts. For example, one villa in Abu Dhabi that was previously listed at about 16 million dirhams, roughly 4.3 million US dollars, reportedly lower its price by 20%. But investors are still very cautious. Many buyers are waiting to see how the war develops before making financial decisions. Interestingly, not everyone is panicking. Some investors believe this conflict may be short term and they see falling prices as an opportunity. Real estate agents say some buyers are already looking for discounted properties. In fact, some investors say they would consider buying if prices fall 50% or more. That's a classic market behavior. During uncertainty, some people run away, but some people would look for bargains. Analysts say the biggest risk may be in Dubai's luxury property market because ultra wealthy investors are usually the most sensitive to risk. They often have multiple homes around the world, so if one location becomes too uncertain, they simply move to another city. That means if wealthy investors start leaving the UAE, the high-end property market could be hit first. That means more listing, lower prices, and weaker demand. This story is far just about Dubai. It shows how geopolitical conflicts can reshape global capital flows. For years, Dubai positioned itself as financial safe zone in the Middle East, but war has a way of changing risk perception very, very quickly. When missiles start flying, investors everywhere start asking this question: where is the safest place to park my money? That can shift capital into different countries, different markets, different assets. Right now, it's still too early to know the full impact. If the war ends quickly, Dubai's economy may recover without major damage. But if the conflict continues, the situation becomes a major test for the UAE's reputation as the so-called global safe haven. Because in global finance, confidence is everything. And once that confidence is shaken, it can take a very long time to rebuild. That's why investors around the world are watching the Middle East conflict very, very closely, not just for military developments, but for how it could reshape global capital flows. So we'll take a short break for now, and when we come back, we're diving into the story of the Fed signals green light for tokenized securities. So do stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxum TV. I'm your host, Jamie, and thanks for sticking around with us after the break. We're now going to move on into a major development happening very quietly in the financial system, but one that could have big implications for blockchain and traditional finance. US regulators are now sending a very clear message. Tokenized securities will be treated the same as traditional securities. In other words, if a stock or bond is issued on the blockchain, regulators say it should follow the exact same capital rules as normal financial assets. This guidance was released jointly by 3 major US regulators that include the Federal Reserve, the FDIC, and also OCC, which stands for Office of the Comptroller of the Currency. And the message from regulators is simple. Technology does not change the rules. The key idea behind this new guidance is something called technology neutrality. That means regulators do not care whether an asset is issued on a traditional system or on a private blockchain or on a public blockchain. What matters is the legal nature of the asset itself. If a token represents a stock or a bond, then regulators say it should be treated exactly like that. So whether it's a stock or bond. So the technology used to issue the asset does not change its regulatory treatment. The guidance is especially important for banks because banks must follow strict rules about how much capital they hold against financial assets. Capital requirements act as a safe buffer. They make sure banks can absorb losses during financial shocks. Under new guidance, regulators say if a bank holds tokenized securities, it must calculate capital requirements the same way it would for traditional securities. So, for example, a tokenized bond should carry the same capital treatment as a regular bond. Or maybe, for example, like a tokenized stock should carry the same treatments as if it is just a normal stock. So the token format does not change the risk calculation. Regulators also clarify another important point. it does not matter what type of blockchain the asset runs on. So whether the token is issued on a private permission blockchain or a public open blockchain, the capital rules remain exactly the same. That means banks cannot avoid regulations simply by putting assets on a blockchain. This announcement comes at a time where tokenized assets are growing quickly. Financial institutions around the world are experimenting with turning traditional assets into blockchain tokens. So that includes government bonds, corporate bonds, stocks, real estate, or maybe money market funds. According to the industry data, the market for RWA has grown to about $26 billion globally. One of the biggest categories is tokenized US Treasury products. Tokenized stocks are still relatively small at about $1 billion in market size, but the sector is growing. Many fintech companies and trading platforms are already experimenting with letting investors trade tokenized versions of traditional assets. But regulators are making one thing very clear. Even if these assets move on to blockchain networks, they still fall under existing financial laws. Earlier this year, the US SEC also confirmed that tokenized securities must follow normal securities regulations. So that means registration requirements, disclosure rules, and investor protection laws still apply. So tokenization does not remove the legal framework of traditional finance. Still, this guidance is important because it reduces uncertainty for banks. For years, financial institutions were hesitant to enter the tokenized asset space, not because of the technology, but because they are unsure how regulators would treat these assets. Now regulators are clarifying the rules. The key message is this: tokenized securities will not face extra regulatory punishment, but they also won't get special treatment. They will simply follow the same rules as traditional financial assets. And over time, that could bring more traditional financial assets onto the blockchain networks. We will, of course, keep tracking how this plays a key role in shaping the future financial market. Now, let's shift gear and move on to some technology trend coming out of China. So, something big is happening in the whole AI industry. China's tech giants are now racing to build AI agents, so systems that don't just chat with you like ChatGPT does, but actually perform multiple tasks for you. And one name is suddenly everywhere is, of course, OpenClaw. Across China, developers and tech companies are pushing OpenClaw style AI agents into real products, and this could mark the start of the next phase of the AI industry. So, just to give you guys a quick context, OpenClaw is not just another chatbot, it is an AI agent system. That means instead of just answering questions, the AI can actually complete the task for you. For example, an AI could search the internet, use software on your computer, fill up some forms for you on your behalf, order services or fix some errors and maybe entries, some tasks. In other words, it acts more like a digital assistant that can take action. In China, what's going on in the local land? Major companies are now rushing to build their own versions of the system. For example, Tencent engineers recently set up booths outside their headquarters in Shenzhen, helping users install OpenClaw system on their computers. So people actually lined up carrying their own laptops, their own NAS servers and mini PCs just to install the software. It certainly looks like a tech festival. Meanwhile, companies like Xiaomi are testing their own AI agent systems. The goal is to embed AI agents across the entire ecosystem. So that will eventually include smartphones, cars, TVs, and smart home devices. So AI could eventually control and coordinate all of those devices all together. But there's another reason tech companies are pushing AI agents so aggressively. And of course, that is the financial aspect, which is the revenue, how much money they can make. Over the past 2 years, Chinese tech giants have spent enormous amounts building AI infrastructure. So companies like Alibaba, Tencent, ByteDance have invested tens of billions of dollars into data centers and computing power. But there is a major problem. Simple chatbot conversations don't use enough computing power to justify those investments they made. Asking AI to write an email or generate an image uses a very small amount of computing resources. That means expensive AI data centers can sit underused. AI agents like OpenClaw, of course, solve that issue very much because complex tasks it requires so much more computing power. Like, for example, if you ask an AI agent to complete a complicated task, it may need to search multiple websites, use different apps, and analyze those data and actually make that action and push that button for you on your behalf. Each of those steps send API requests to cloud servers, and that consumes far more computing resources than a simple chat message. Some analysts say complex agent tasks can consume hundreds or even thousands of times more computing tokens than normal chat. For for cloud companies, that means more revenue. But the strategy goes even deeper than that. AI agents can also help companies collect something very, very valuable, which is user behavior data. In the AI world, training data is everything. Most large AI models have already consumed huge amounts of public internet data. So things like Wikipedia, news articles, books, or maybe some research paper. Well, that type of data has limits. To build more powerful AI systems, companies now want something different. They want task data. So what is the task data? So task data records how humans complete real-world actions. For example, how people search for information, how they use apps, how they complete transactions, and how they solve problems step by step. When an AI agent performs tasks for a user, it can record the entire process. So every single step, every correction, every decision. So that information becomes incredibly valuable training data for the next generation of AI systems. In a way, this turns millions of user devices into AI data collection tools. When people use AI agents on their computers or phones, they are unknowingly helping train better AI models. This is actually very similar to what Tesla did with self-driving cars. Tesla used data from millions of vehicles on the road to improve its autonomous driving system. Now, AI companies may be doing something very, very similar, but with human digital behavior. All of this leads to an even bigger battle, like the next battle for the battle for the next digital gateway. In the early internet days, the gateway was web portals. Then it becomes search engines. In the mobile era, the gateway becomes apps like WhatsApp, WeChat, TikTok, Instagram. But AI could change that again. In the future, users may not open apps directly. Instead, they simply tell an AI agent what they want. For example, book me a flight to Singapore, order a dinner, or maybe schedule a meeting. The AI agent would then decide which app or services to use on its own. If that happens, apps themselves may become less important. They wouldn't disappear, but they may become back-end services instead of the main interface. The real control point would be the AI agent that understands user intent, and whoever controls that agent could control the flow of digital activity. So the bigger picture, that's why tech agents are racing to build AI agents right now. This isn't just about building a smarter chatbot, it's about controlling the next generation of digital platforms. If AI agents become the main way people interact with the digital world, the companies that control those agents could hold enormous power. And according to many analysts, what we're seeing today with systems like OpenClaw may just be the beginning, because the AI industry is now shifting from talking AI to action-taking AI, and that shift could transform the entire structure of the internet. All right, so let's shift gears a little bit and look at some Bitcoin update. And actually, let's move on to Canada, where a very bold Bitcoin proposal may now be coming to an end. The city of Vancouver had been exploring the idea of creating a Bitcoin strategic reserve, but now city officials are recommending canceling the plan entirely. And the reason, according to the city staff, Bitcoin is not legally allowed as an investment asset for the city government. The proposal was actually first introduced by Vancouver Mayor Ken Sim back in November 2024. The idea was to allow the city to allocate part of these financial reserves into Bitcoin. Supporters argue that holding Bitcoin could help the city to maybe protect against currency devaluation, hedge against inflation, and diversify its financial reserves. The proposal even had a long-term vision, so it aimed to position Vancouver as a Bitcoin-friendly city. In December 2024, Vancouver City Council actually approved a motion to study the idea. Officials asked city staff to analyze whether Bitcoin reserve could realistically be created. They also requested a full report on the plan. That report was expected in early 2025, but now the results of that study have finally been released, and the conclusion was not favorable. According to the report, the biggest issue is legal restrictions. Under the Vancouver Charter, which governs how the city manages public funds, Bitcoin is not listed as an approved investment asset. Because of that, city staff say the government cannot legally allocate reserves into Bitcoin. And based on those rules, they are now recommending that city council cancel the proposal entirely. The report also mentions several additional concerns. For example, the project would require additional government resources and staffing. Officials say those resources may be better used on other city priorities. Another issue is price volatility. Bitcoin's price has experienced major price swings recently. Of course, we dropped from a top of 126K back in October 2025, and right now we're just hovering around 67.5K, bouncing around and consolidate a little bit. But point being, if we take the top all-time high of 126K to a low of 60K, that is a more than 50% drop within 4 months. So that volatility, of course, raised concern about using Bitcoin as a reserve asset for public funds. But even though the proposal may now be scrapped, the idea itself reflects a growing trend. More governments and institutions around the world are discussing Bitcoin reserves. Some companies have already adopted similar strategies, and a few governments are beginning to explore how digital assets could fit into national financial systems. So for now, Vancouver's Bitcoin reserve plan may be off the table, but the big conversation around whether governments should hold Bitcoin as part of the financial reserves is clearly not going away. And that debate is happening all over the world, including in countries where Bitcoin has faced some of the toughest regulatory battles. So right now we'll take a short break here. When we come back, we'll be joined by a very special guest, like someone who has directly involved in one of the most important legal fights for crypto in India. He helped take on the central bank and fight all the way to the Supreme Court to overturn the country's crypto banking ban. So do stay with us. This conversation is going to be very, very interesting.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy. Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone, and thanks for sticking with us after the break. We now have a very special guest joining the show, someone who has been deeply involved in the Bitcoin space for more than a decade, not just as an advocate, but also as someone who helped shape the legal fight for crypto in one of the world's largest economies. So, joining us today is Suril Desai, a Bitcoin lawyer, filmmaker, and long-term Bitcoin educator from India. He played a key role in a landmark Supreme Court case that overturned India's crypto banking ban back in 2020, a decision that helped reopen the country's entire crypto industry after banks were prohibited from working with digital asset companies. So today we're going to talk about the legal battle, what it was like fighting regulators at the highest court in the country, and what the future of Bitcoin adoption could look like in India and beyond. So, Surreal, welcome to the show. It's great to have
Thank
you
you.
with us today.
Thank you so much.
Yeah, since this is your first time here on Roxham TV Hong Kong, why don't we start with a little bit background of yourself? Because, like, not gonna lie, I was going through your journey a little bit when I was doing the research. Something I find very interesting is that you failed your ninth grade and then you were kicked out of college earlier. So, is that how you discovered Bitcoin?
Not, I mean, uh, like I discovered decentralization when I was a student in Silicon Valley back in 1999 to 2006. And in the around uh the year 2000, I chanced upon this one. At that time, internet was 24-hour internet was just coming to age, and at that point, I was online and I discovered this site called SETI, which was one of the earliest attempts at decentralized computing, power of decentralized computing. And SETI was a program which was started by University of California, Berkeley. Basically, it stands for Search for Extraterrestrial Intelligence. I know it's very esoteric, but the idea was to connect, we had to download their software onto our computers, which basically made our computers a node and which connected to a central server, which was located in UC Berkeley. And we were told that, leave your computers on, leave your internet connection on, and let the excess computing power go and aggregate in the central server, which was searching for radio frequencies in outer space. And that was my first experience with decentralized computing. And long behold, I came back to India in 2006 and completely had forgotten about this. And then it came back to India, started my law school in India, and and then in around 2011, one of my colleagues told me that, you're researching privatization or space exploration, you're researching all these other things. Take a look at Bitcoins. You might find it interesting. So I went and, at that time, the only thing about Bitcoins was the dark web and it was used for nefarious purposes. But when I read the white paper, three or four things really stood out. I mean, I'm not a computer science student, so for me, the computer science part of it was little difficult to comprehend. But the three, four things that stood out for me was that Bitcoins was permissionless, censorship resistant, and global. And these three things really got me to think that if this thing became a reality, it would be a great boon for the people of the world. And my father has founded one of the leading law firms in the country, Nishit Desai Associates, with whom I have been working. And I approached my father and I told him, let's have a look at Bitcoins. And at the very instant, he was like, this looks a little s- sketchy, a little dangerous. But when he read it, when he read more into it, he was convinced that this could be quite a revolutionary I don't know what to call it. I mean, is it a financial instrument or a technological tour de force? And we started researching in it, and we thought it would take about 8, 10 years by the time Bitcoin actually becomes something to be talked about. But it was in 2013 is when the Reserve Bank of India came out with its first notification against Bitcoins. And as a result of that, the Enforcement Directorate, which is the enforcement arm of the government, went and raided a whole bunch of crypto exchanges. And remind you, this is 2013. So Bitcoin was, I mean, barely about 100 or 95 to $150 per Bitcoin. And we had already done our research. We had looked at the Coinage Act in India. We had looked at the FEMA, which is Foreign Exchange Management Act of India. We had looked at SEBI, which is the Securities and Exchange Board of India. We had looked at the Indian Constitution. And we were convinced that under none of the existing laws, Bitcoins were anyway illegal in India. So the exchanges of that time, that era approached us, and many of them still exist today. And they came to us and we said, how do we tackle this? So at that point, we thought that we should, we were discussing whether we should write to the government to set up a committee to look into Bitcoins and cryptocurrencies more, more precisely. And we realized that if we ask the government to set up a committee or any kind of a body to research into it, it would take its own sweet time, and it would take nothing less than 6 to 7 months before any concrete decision on cryptocurrencies would come out. And so we said, let's take the bull by its horn. So what we did is that we invited all the crypto players of that era, and we held a press conference with them where these Bitcoiners and cryptographers and all came, and they explained the technology. And at the at the climatic end of the conference, we we had briefed my father, and my father was also convinced to come and make a statement. And he said that Bitcoins are not illegal per se under existing laws of India. But an ordinary person should be careful before investing in them. And that statement was, we had a whole bunch of news and press media present, and that was carried out. That press statement went out in all the major publications of India. And within 3 or 4 days of that statement, the Bitcoin exchanges were up and running because the Enforcement Directorate realized that they should study it more before they would have raided it. And then we had done some research papers on this subject. And that's how we rescued the entire industry as our first foray into the Bitcoin and crypto space. Post that, everything was running smoothly, but then there was this big Bitcoin scam sort of a thing that was played, Ponzi scheme that was played in India. And that and as a result of that, in 2018, I mean, between 2013 and 2018, things were running quite smoothly, and we saw spike in Bitcoin adoption post the during and after the demonetization, which happened in November of 2016. And post that, everything was going smooth, and exchanges were, and we had also prepared self-regulatory, a kind of like a self-regulation for the crypto industry, and we had published that booklet too. And as a result of that, the Indian exchanges were very, they were doing KYC in spite of the fact that there was no regulation. And when this Ponzi scheme was played, the Reserve Bank of India again got little worried. So in 2018, they came out with a notification which 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 told the banks not to operate the accounts of crypto exchanges and to block crypto, people who held crypto. And then in May of 2018, we filed a writ petition in uh, and along with that, there were a couple other writ petitions which were filed. And so the Supreme Court of India said that we'll take all these matters collectively and we will hear them out. And ours was the main writ which was filed. And and then we then and then the trial lasted for about 2 years. And during that time, there was a lot of uh, we set up a temporary organization called BACC, which was Blockchain Association, under the IMAI. And and then it took 2 years, and finally on March 4th, 2020, the Supreme Court came out with its verdict where it said that, you can't ban Bitcoins, you can only regulate them. And as a result of that, we again helped the entire crypto industry uh, to rise back on its feet. So that's in a
Yeah, that
nutshell.
was definitely a very inspiring story that you just shared. So I wonder, that was a long battle, like from 2018 to 2020. So 2 years battle, like how did that feel? Like did you always have the sense that you guys will win this battle because like Bitcoin is here to stay? Or you feel like India at that point, especially from between 2018 till 2020, was not ready for crypto or Bitcoin asset? Like there's like so any hurdles you could share a bit more?
Yeah, I mean, we weren't, I mean, to be honest, we were not able to, we were not very confident as we are today. But, but at that point, we felt that it held some substance. And because we had done so much research and we had uh, studied the various acts, we studied the Constitution, and we I mean, the one of the hearings, we were expecting the judgment in November of 2019, but then it got pushed to March 2020. The hearing got pushed and adjourned because you know the it was a three-panel judge of the Supreme Court, um we had to explain Bitcoin in the simplest possible language in limited amount of time. And it 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 I mean, we felt that, that if we lose, we would find some way around it. But the question was, what if we won? And and that's what we were not prepared for, and because if you win, then suddenly you have uh, policy frameworks to be put in place. And discussions around policy and all have been going on in India for a long time. But adoption is pretty high in India. And uh, and there was a little bit of nervousness, but finally when the judgment came out, we were quite ecstatic and we were like, wow, we did it. And unfortunately, not too much of the press in India and probably abroad, a few press covered it, but it was not well covered because immediately a week after the judgment was the COVID pandemic, which came out. And so this news and this judgment was one of its first of its kind anywhere in the world in favor of Bitcoin, and that too coming from the apex body of the Supreme Court of India, which is the ultimate authority on any rule of law. And when it came out, we were quite ecstatic and jubilant, and suddenly we saw this rise in this interest in this whole asset class.
Yeah, I mean, that was definitely some information you just shared about India also having a relatively active Bitcoin community. Could you dive deeper? So, for Indian Bitcoin community, are they more focused on the financial aspect or just like a decentralization aspect as well? So, when it comes to Bitcoin adoption, like, because I personally have never been to India, like,
Mhm.
could you share some example? Is there like maybe B2B aspect that you can pay it in Bitcoin, or what is the situation going in uh, India locally?
No, so I mean, Bitcoin is not considered as a legal tender in India as yet. It's and uh, but because the government could not ban it, they tax it heavily. So there's a 30% capital gains tax without, and you can't set off your losses. And there is a 1% TDS on every Bitcoin transaction. And that has made it really difficult for Bitcoiners in India to really trade or, uh, uh, work in the space. So many of them have, migrated out of India and moved to places like jurisdictions like Dubai and Hong Kong. And and what I've observed is that there is a lot of suddenly there's an increased interest coming from family offices in India for Bitcoins because many of them feel that Bitcoin is quite it has it has been tested through time and over again. It has been through its crisis, it has been through its ups and downs, and now we are seeing an increased appetite for people to take risk with an asset like Bitcoin. Also, what I've observed is that, you know, when I started out and I was talking about Bitcoins, everyone used to think I'm a crazy guy, but now they all call me a visionary. So it's the sudden change in attitudes of people towards Bitcoins and other cryptocurrencies, uh, uh, has made India quite an interesting place for this. And many of them
Yeah,
are.
just to go back to what you mentioned, so there were a 30% uh, capital tax on the Bitcoin gains. Do you think, like in your opinion, do you think this is too high, or basically for India's tax structure is basically on par with trading stocks or any assets in India? What's the situation
Yeah,
there?
I mean, the capital gains is not the issue. Capital gains, people are willing to pay, but that 1% TDS on every transaction, that's what is really hurting the industry because, how do you trade when you have almost 1% on every trade, right? And that makes it difficult for the trading community to operate efficiently within the framework of government regulation. So many of them tend to go offshore, which results in a lot of what I call intellectual capital of India being drained. And in fact, I'd written a piece couple during COVID for a major Indian publication asking the Indian government to set up a crypto regulatory and regulation and development, research and development agency, asking the government to form something like that. But I think the government of India has been a little weary of doing anything with crypto. But now that most of the world has accepted it, I think I see a brighter future for crypto in India.
Yes, I love that. And since that you have been around in such an early days, I noticed that you also attended India's first Bitcoin conference even back in 2013, and you were giving away BTC. So, like looking back in 2026, Do you regret or no? It's just like it is what it is.
It is what it is. I my firm gave away some Bitcoins in 2014, actually, at a conference that we had held, where we had invited, it was prior to the election of the current government, the Modi government, and we had political people from political parties from almost every single political party that was representative in India at that point. And we had CEOs of couple of companies, and we gave a few satoshis as a as just like when you go for a conference you get merchandise. We were giving away a few sats and to everyone, but most of the people left them behind. and one of some of my colleagues just picked them up, and they just kept it with them. And it was, I mean, giving away Bitcoin, I mean, a few satoshis is, and at that point you got to remember the price was also not so high. So, and I didn't expect Bitcoins to go to like 126,000 or even at 60,000 today, whatever it is. I never expected it to become such a major, I thought it would take some time by the time it gets adopted, but the adoption was faster than I expected.
Yeah, I mean, Bitcoin adoption is so rapid, and also when it comes to Bitcoin price, it certainly does act like digital gold, though it is correcting quite a lot from its all-time highs. It's down like 50%. So I want to ask you this next question, because like you as a Bitcoin veteran, when someone new enter the Bitcoin world, like how do you explain them maybe Bitcoin is more like digital gold than maybe for than it is for payments or anything else? Like, how do you explain to newcomers for that?
I mean, uh, for a newcomer, I would say like I mean, I see a major distinction between Bitcoin and other cryptocurrencies, because whenever uh people call me up for advice on Bitcoin or anything, they are like, oh, but there are these other Bitcoins. I'm like, there is no other Bitcoin. That's the first level of uh nuance that you face. And I tell them that, that only put in the amount of money that you are willing to lose. Don't, just because the Bitcoin price has been fluctuating so much, it doesn't mean that you put in your life savings into it. I say take the risk that, which won't hurt you, in because you need to have what I call rhino skin to be in the Bitcoin space, because you can be making, Bitcoin prices I've seen them have been volatile for a long time. But I tell a lot of newcomers that don't look at Bitcoins in dollar terms or in euro terms or whatever. Think of it like, like uh it's like, the fiat money is doesn't have a limit to its printing, while Bitcoin is limited, and it's you can't have 22 million Bitcoins. You can only have 21 million. So, and if you want to print more Bitcoins, you need a complete consensus from all the people involved in the Bitcoin blockchain, which is very hard to get. And you know uh, to explain to a newcomer what Bitcoin really is, I mean, you have to educate them in about how the fiat money was decoupled from gold back in 1971. You have to go into the history of that. But most of the people are not interested in understanding that. So I simply tell them that, it's look at it's been around for about 17 odd years now, and just look at its appreciation. And because there is so much liquidity in the market today, and it's chasing hard assets, and Bitcoin is slowly becoming an hard asset, because banks are now getting in, you have institutional capital coming in, so people feel more comfortable with investing in Bitcoins now.
Yeah, I'm sensing a lot of Bitcoin maximalist stuff coming from you. The energy is very strong, and I happen to hear that you have a Bitcoin tattoo. If that is true. Yeah, I'm sure Bitcoin means very emotionally to you on a personal level as well. So you happen to found a Bitcoin media, so Yugen Media, and you produced a documentary funded entirely with Bitcoin.
It
Could you
was not,
tell us a
I
little bit
mean,
more how that
actually,
happened?
what happened was I made a documentary about a former militant in Kashmir, which was back in 2017. And after that, my crew was going to Afghanistan for some snowboarding and skiing expedition. And at that time, uh, uh, the US and the European and the Western troops were still present. It was before the Taliban retook over. So this was in 2019 is when we filmed it. And I spoke to my co-producer and I told him like, can we, experiment with using Bitcoins as a means of mechanism to do this documentary. I didn't, to be frank, I didn't fund it completely by Bitcoin. I used a portion of it to fund it, and and my what I realized was that like back in the day when journalists had to go to conflict zones, they had to carry, getting access to cash is so difficult, and you'd have to carry bag full of money because credit cards wouldn't work. And if you're producing something, you would so I said let's experiment with Bitcoin, and I just gave away like a few about I mean the documentary was really low budget, so so I said let me experiment with about half to one Bitcoin, and I used that to fund the documentary.
I mean, that was very interesting. I mean, even just a portion of that documentary is funded by Bitcoin, I think is extremely cool to hear, like,
Yeah.
especially coming from a Bitcoin investor perspective myself as well. So I wonder when you proposed the idea, with that like a lot of pushback experience, or people mostly see that, oh, Bitcoin being a very valuable asset, like more than welcome to see a documentary funded partially by Bitcoin.
I mean, I think uh, it gave us good press for sure. That one of the first few documentaries to be funded by, not entirely, but partially by Bitcoin. And what I realized is that the the power of Bitcoin is that you go anywhere in the world, and now it's at like in the past everyone used to look at the US dollar, and now people are more excited about Bitcoin than the US dollar, and it's become a part of public discourse everywhere I go. Like I some so right now one of my friend he started this influencer thing called Get Your Sats, where he educates people on Bitcoins on the streets of Bombay, and he gives away a few Satoshis, and people are becoming more receptive to it. And the documentary only gave me a little bit of it was just an experiment and it worked. And now I think more and more people will realize how important Bitcoin is, especially when it comes to the world right now, where we are engulfed in a couple of conflicts. And talking about conflicts, I'd even helped, a couple of my friends who were one of my rabbi friend who was coming to India. And so at that time, Prime Minister Netanyahu was coming to India, and he wanted to come to India because his brother was killed during the 2008 terror attacks in Mumbai, and he wanted to come to India. So I funded his trip using a Bitcoin. So uh, I mean, there is a lot of, it's I think Bitcoin will become has a language of peace associated with it, because it's and people are going to accept Bitcoin as a global force.
Yeah, speaking of conflicts, like you just mentioned, one narrative people like to put out for BTC is Bitcoin being the safe haven asset. So obviously, geopolitics are getting more uncertain in this day and age, even in 2026, which I personally find it very ridiculous. So, like in your opinion, the narrative of basically digital gold or the safe haven asset for BTC's price, it hasn't been fully reflected because it's down 50%. So, do you think the narrative of BTC being the safe haven asset in uncertainty times like this is still valid?
I mean, BTC will. That's a tough question, and that's a very good question too, because uh, we are seeing. It does become a safe haven because you. If you have what I say is like if you have gold, if you have a kilo of gold or a X amount of gold with you, and you want to move it around, it becomes very difficult. You can't carry. If you had to carry like 2 kilos of gold, you'd be stopped at the customs authority, and things like that. But with Bitcoin, it can travel with you, especially if it's in cold storage and or if it's on exchanges, you have access to it uh, much more easier than gold. And I think it does two things. One is that it's fungible, and the second is that it is you know peop if uh, if like in continents like South Africa, in continents like Africa and other parts of the third world where the currency is getting devalued at a rapid pace, Bitcoin becomes an alternative to gold. It's like if you're going to put all your assets, you need to dedicate about one to, it depends on your risk appetite, but at least 1 to 5% of your risk appetite should go towards Bitcoin.
Yes, that is really good advice. That's what I have been telling to my own community on YouTube as well. So, we are moving towards the end of the interview. So, some last few questions. Okay, I want to ask you personally. So, if you could offer some advice to new joiners, or maybe if you could go back in time when you started out in Bitcoin, is there anything you would have done differently? Maybe you've bought Bitcoin, even a bigger purchase, or is there anything you want to say to yourself back in 2011?
Yeah, I would have. I mean, I. Uh, I had the opportunity to buy Bitcoin at like really throwaway prices, right? But at that point, I took a conscious decision not to become a trader, not to buy too many Bitcoin, because early on I realized that in India, Bitcoin will be litigated and it'll be, it'll become a contentious subject. And being a lawyer and being a part of my law firm, I realized that I'd rather be a crypto lawyer who can who can s- whose law firm can stand up in the court of law and defend Bitcoin without any conflict of interest. So to avoid conflict of interest, I decided not to buy too many Bitcoins. I did buy though. It's not, but I just bought it as a, just to be a part of the community, because if I were seen as holding 1,000 Bitcoins and then I'm saying that I want to fight the case in the court of law, the court would say you have a major conflict of interest because you are defending Bitcoin because you have so many Bitcoins. I mean, so I mean, one thing it's both, it's regrets. I don't have any regrets for not buying Bitcoin, but I think advocacy is where I really want to participate in now, you know.
Yes, I mean, that's very inspiring indeed. But like speaking of a lawyer background, I kind of want to shift gear because you mentioned something very interesting. I mean, I wanted to end this segment, but because like I'm enjoying the conversation so much. So like for lawyers out there, like maybe for younger lawyers, younger people entering Bitcoin, maybe through the digital asset law aspect, like one major competitor we have when it comes to becoming a lawyer is AI. So, like, if you have a child right now, they are entering, just getting into university, would you advise them to take law as the major, or maybe something else?
No, see, law, I mean, l- even with AI, lawyers are still going to be, you know, like what we say is that, you know, like the work that used to take me 10 hours to do, I can do it in 1 hour with AI. And but the interpretation, you know, interpretation of the regulations, interpretation of the law itself, interpretation, it has a lot to do with interpretation. And I mean, lawyering will continue in the future. It'll be different. It's like I don't see AI as a threat to anything. You know, like AI is, I mean, I remember when I was growing up, people saw computers as a threat. You know, they said that computers will come and they will take away all our jobs and we won't have enough people doing accounting and things like that. But look at what we have now. You know, like the internet revolution has created so many jobs and so many things. And AI is just a line extension of it, where, so, I mean, those who people who will be challenged by AI are those people who don't adopt to it. You know, people who say like, "Oh, I'm not never going to use AI. I'm not going to interact with AI." No, I mean it's like saying that I'm never going to use a computer. And you know, manufacturing will have more adverse effects of AI because with robotics and AI, you'll need less people to do manufacturing work. That's where it's little concerning. But when it comes to intellectual professions, which are like lawyering, doctors, and things, certain kind of engineering, where human interpretation still matters, it'll be very crucial. In fact, uh, l- lawyers will have a better chance with AI than without.
That is a very interesting perspective I just learned because, like, here on Roxham TV, we cover a lot about AI development, and I'm personally very impressed by how AI, like, how rapidly it is developing. But like, as you mentioned, like, the next, I would say the next step is more like human using AI and adding that into our daily lives instead of just like shutting it down. Because like we know if we shut down AI, that we will become like obsolete in the near future. So, my final question for you, like since you have seen different cycles, you have been around in the Bitcoin space. So, like, what is the next big goal that you trying to achieve in the Bitcoin space?
So what I feel is that we need to educate, create. I mean, I haven't seen. I mean, Bitcoin is still. Uh, you know, it started out as a social movement where people who are the underserved market of of our world was being served by bitcoins, and that's what its origin was. And now it's getting concentrated, and when you know, when bitcoins start getting concentrated in a few hands, that's where its biggest danger and fall lies. You know, I mean, bitcoins should be, you know, even though there may be only 21 million bitcoins, but you know, each bitcoin has 100 million satoshis. So I mean, in the future we'll be using the word bitcoin less and sats more, you know, so it'll become a part of our daily vocabulary. And I feel that, you know, you know, everyone should participate in this movement. And and build a a society where where uh, we can where trust is not in people but in the infrastructure, and people should invest more in Bitcoin infrastructure than simply just buying and selling.
Amazing. I love that. But unfortunately, that's all the time we have for today's show. So a big thank you again to Suril for
Thank you.
joining us. And of course, thank you all of you watching and sticking around and being part of this conversation. We still have more great programs lined up here on Roxham TV from other hosts, so be sure to stay tuned for that. As for myself, I'll be live here from Monday